Hello students, good afternoon everybody and welcome back to CSEET Economics Revision. We are on a good pace students, and probably with this pace, I think we should finish our revision today and we don't need any other day after this. So I think today we will complete our revision because we have just 5 chapters and we are at a good pace. We have completed already fourth chapter. We just have the fourth chapter pending a little bit and the fifth chapter completely. So that we will do today. Let's wait for a couple of minutes, students. There are a few students to join in. So looks like around 3 to 4 people have to join in yet. So we'll take a couple of minutes. Until then, if you have any doubts up to this chapter, up to where we have done yesterday, chapter 1, 2, 3, and the fourth chapter part up to the share capital, up to there. Okay, up to shares. If you have any doubts, please put across your doubts. I am right here. I'll be turning off my audio and video, but I will be right here in case you have doubts. If it's all clear, well and good. 1 more minute and we will begin. We'll just wait for 1 minute. If there are people joining in, then we will begin. Okay, looks like no doubts at all, and we have people joined in as well. So let's begin, students. We stopped at certain things, so we will continue from there and let us move on. We were speaking about how stock market started. Okay, the growth of stock market, that's what we were speaking about. So let us continue. Application, give me a minute. I will share the screen with you. And as promised, students, once all the chapters are done, I will give you a consolidated PDF, okay, of what we have underlined. I will give you a consolidated PDF of that. So don't worry. Share squid. Okay. Can you all see the screen? Yes, no, maybe. Diksha says yes. And Ruchita Surabhi says, Shraddha says yes. Okay, so that means everybody can see the screen. Okay. Basics of capital market, students. This is what we're looking at now. Types of shares and debentures. And here, what is important is this one. The Bombay Stock Exchange, BSE. was recognized in May 1927 under the Bombay Securities Control Act, BSCCA, Bombay Securities Contracts Control Act 1925. Okay. The Bombay Stock Exchange was recognized here in May 1927 under the Bombay Security Contracts Control Act 1925. Please underline this, because they might give you the Bombay Stock Exchange was recognized under which act. So it's Bombay Securities Contracts Control Act of 1925. Okay. Now, next, students, what is important is in the next page, types of shares. So we have equity shares, preference shares, and debentures. Okay, in shares and debentures. So let's look at one by one. Firstly, it is equity shares. What are equity shares now? Equity shares, students, sorry. Equity shares, students, are ordinary shares. Okay. Equity shares are ordinary shares. Okay. Or also called as common shares. And they are called as the owner's capital. And these are the real owners of the company. See, so many things, students. Equity shares, also known as ordinary shares, also known as common shares, called as owner's capital, and these are the real owners of the company. Okay, these are the real owners of the company. And also know, equity shareholders are paid dividend. Okay, equity shareholders are paid dividend, but when? After paying it to the preference shareholders. After paying it to the preference shareholders. So once they pay the preference shareholders, only then you will get the dividend. Okay. In case after paying the preference shares, if the profits are over, then you will not get anything. Okay. Then you will not get anything. So remember that. Next. Here, this is important. IPO. What is IPO is important. Initial public offer. Recently, you know, in the stock market, a lot of companies are coming up with IPOs. Okay, a lot of companies, okay, which were private limited, are coming up with IPOs now. So IPO is nothing but offering of the shares of your company. Okay, offering your shares of the company to the public for the first time. If you have a company, say Shraddha Private Limited, and you want more money and you want to go global now, okay, all over India, so you will make it Shraddha Limited instead of private. You will make it public limited. So you will come with an IPO. You will launch the shares, okay, and people will buy it. So IPO is called as initial public offer. That means first time offer you are making of shares for the people, for the common public to buy. If in case after that again you are making an offer, it is called as FPO, okay, follow on public offer. That is not that important. Mainly is IPO. Now students, in equity share capital, okay, once you tell, you know, issue shares, there are a lot of things you should know. There is something called as authorized share capital, issued share capital, subscribed share capital, paid up capital, right shares, and sweat equity shares. Let us see what this is one by one now. Okay. Firstly, students, authorized share capital means what? Just because you have come into the public doesn't mean you can, you know, issue shares of 100 crores, 500 crores, 10,000 crores. No, you know, depends. And that is nothing but authorized is called as maximum amount of capital which a company can issue. You have to comply with SEBI and other legal bodies, and they will let you know how much you can issue, okay, based on your company's you know, past performance in you know, when it was private, okay, what and all kinds of business you're doing, how much of money you already have. So seeing all these things, remember, authorized share means maximum amount of capital which a company can issue. Okay, above that you cannot issue. So maximum amount of capital which you can issue. Say if the is, you know, SEBI says you can issue for 10 lakhs, so maximum amount of capital which you can issue is for 10 lakhs. That is called authorized share capital. Next, students, is issued share capital. Issued share capital. Now SEBI might tell you you can issue for 10 lakhs. But you are thinking we can issue for 10 lakhs. No, now I don't need 10 lakhs. Now I just need 2 lakhs. So I will issue out of, SEBI has told me you can issue and ask money from the public up to 10 lakhs. But I will think, what will I do with 10 lakhs right now? Right now, I don't need 10 lakhs. Right now, let me ask only 2 lakhs from the public. So how much you ask from the public, no, out of the total, Okay, whatever they have told you, that is called as issued share capital, and that is why it is called a part of authorized capital which company offers to the investors. So whatever company offers to the investors and which is a part of authorized capital, this is called as issued share capital. Next, now see, out of 10 lakhs, SEBI told you, you have decided to issue only 2 lakhs. Now you've issued 2 lakhs. But what is the guarantee that people will buy it? Okay, people might buy either 2 lakhs or there might be people who will buy, but your total people, what they buy will come up to only 1,50,000. So whatever people buy, no, from what you have issued, that people, whatever they buy, that is called as subscribed share capital. They have subscribed for only so much. So subscribed share capital means, students, it is that part of issued capital which the investor accepts. So subscribed means of that issued, you had issued 2 lakhs, but how much has the investor or the customer brought? Okay, how much he has purchased. So whatever the investor is accepted, okay, that is called as subscribed, which is a part of issued capital. Next, students, okay, next one is paid up capital. Next is paid up capital. Now, what is paid up capital? Paid up capital, it's not required, students, for you, okay, but just know what is paid up capital. Now, see, there is something called in 12th, you have learned this, okay, share application, share allotment and all that, share first call, second call. So if the share costs say 10 rupees, okay, firstly, when they're subscribing, they don't need to pay the entire money, only little money is paid. And sometimes people will pay half money and remaining they will not pay at all. Okay, all these things will happen. So how much ever money people have paid, no, from the subscribed capital, they have subscribed for 100 shares, but maybe they have paid only the application money and remaining money they have told they'll pay later, but they have not paid at all. So whatever money they have paid, right, only that is called as paid up capital. Remaining money, if they have not paid, it will become calls in arrears, and then you can cancel the shares, which is called as share forfeiture and all that. We don't need that accountancy details here. Next, right shares. This is important. Okay, right shares and sweat equity shares, these are important. What are right shares now? Right shares are those which a company issues to existing shareholders. So these are existing shareholders. For them, the company issues these shares. So why does the company issue such kind of shares? In order to protect the ownership rights of existing investors. Maybe there are new investors coming in, or in case the company is going to someone else, so you need to protect your ownership rights of old investors who are there. You need to give them, you know, a feeling of security, saying that, you know, don't worry, your shares are protected with us. So right share is nothing but to protect the ownership rights of existing investors. Okay, it is issued to existing shareholders. Next, sweat equity shares. Now the word itself tells you, students, sweat, hard work. Okay, so if in your company there are some exceptional employees who are very hardworking and who have done very good job in your company, okay, who have given you some good technical knowledge, who are intellectually very good, for those you will issue some shares, okay, which is called as sweat equity shares, issued to exceptional employees or to the directors of the company for their exceptional job in providing know-how or intellectual property rights to the company. So when they are performing well and when you're giving them the shares of the company, they will still more perform very well, students. Why they'll perform very well? Because they know if we perform very well, the share prices of a company might go up and we might get more profit because we have the shares right now. The sweat equity shares are given to exceptional employees, okay, who do a very good job in the company. So that is called as sweat equity shares. Next, students, we have something called as preference share capital. Now, what is preference share capital? Underline, in preference share, what you should know is if the company enters bankruptcy, imagine ABC Limited goes bankrupt today and you are an equity shareholder, you will get nothing. But first, who will get? Preference shareholders. If the company enters bankruptcy, preference shareholders are entitled to be paid from company assets before common shareholders. Why? That is why the name, students, preference. Okay, they are given first preference. Okay, even when the dividend comes, first you give them, then if it is remaining, it is called as for the equity. Why, sir? That because you are equity shareholders. Equity shareholders means you have a right to vote. You are like, the owner of the company, so you should bear profit or loss. But preference shareholders are not like that. They will not bear profit or loss. Whatever it is, you're closing your company, you're going bankrupt, no problem. But first, from the company assets, payers. And remember, they have a fixed dividend. Okay, preference shares have a fixed dividend. Now imagine your company is doing very well, you have got very good profit, but preference shareholders, they will get their fixed dividend itself. You might get more as your equity shareholder. And remember, they do not have any voting rights because they are not the owners. Okay, they do not have any voting rights in the company. So this is preference shareholders. These are preference shareholders. Next, types of preference shares now. Types of preference shares. Let's see which are the different types of preference shares we have and what we should know here. First, students, remember cumulative frequency preference shares. Cumulative preferences. So sorry, I said cumulative frequency. That's in statistics. I was just taking a stats class before this, so the word slipped out. Okay, cumulative preference shares, students. Okay, what is cumulative preference shares now? In this, if the company earns adequate profit, if the company earns good profit, they will get dividend. Okay, now imagine. Okay, it can claim unpaid dividends of the years in which dividend could not be paid due to insufficient profit. Now imagine you have to get 5% dividend every year. Now 2020 was a pandemic. Okay, so last year you got 5%. 2020 5%. Preference shareholders have to get their dividend, but you have not got. 2021 company is still recovering. You have not got your dividend. 5% and 5%, 10% dividend you have not got. Now 2022, imagine company is doing very well. You as a cumulative preference shareholders, that's the advantage. Cumulative means adding up total. You can ask saying, give me the dividend of 2020, give me the dividend of 2021 and 22, all the 3 years together, give it to me. Why? Because students, as cumulative preference shareholders, you are allowed to claim unpaid dividends in which dividend could not be paid due to insufficient profits. You are allowed to. In which one? Only in cumulative preference shares. Okay. In non-cumulative, only the difference is this that you should know. In non-cumulative, do not have the right to claim unpaid dividend. You cannot claim. Okay. Now 2020, 2021, if it is not given, so sorry. Unfortunately, bad luck. Okay. We cannot pay you. 2022, we have got profit, we'll pay you 5% or whatever percentage is yours, but we cannot pay. Why? Because yours was non-cumulative. Okay, that's why. Next, students, let's know this one. Participating preference shares. What is mean by participating preference shares? Participating preference shares means you are entitled to share the surplus profit and surplus assets of the company. Sir, otherwise also we get profits and profits. No, sir. Yes, but I told you preference shareholders get a fixed profit. Now imagine yours was a sanitizer manufacturing company which you invested in. In this year, sanitizers have gone very high sales. So since it's a high sales, students, you might have got high profit your company. So as preference shareholders, actually you should get fixed. If it's yours is 5%, you'll get 5%. But if yours is a participating preference share, if you have brought participating preference share, students, you can share the surplus profit. You can ask for more profit that you have got. And these who will get? Only participating preference shareholders. They will get surplus profit. Then convertible preference shares, students, these are also important. What you should know here, convertible preference share means you have an option to convert. Imagine you have 100 shares, okay, of a company, preference shares. You have an option to convert it into equity shares after certain number of years or certain number of months. You can convert it. Now it is up to you whether you want to convert all 100 shares or only 50 shares you want to convert, or 75 or 25 or whatever it is. Okay, either you want to convert the complete shares or just a part of the shares. That is up to you. So that is called as convertible preference shares. Next is debentures, students. Next is debentures. Let us say what is debentures now. A company may raise long-term finance. Debentures means long-term finance through public borrowings, borrowing money from people like loan. Okay. A debenture is a document under company's seal which provides a payment of principal, sum and interest and regular intervals. This is like a loan. Somebody has given to the loan to the company. So this is called as debenture. A debenture holder is a creditor of the company. A fixed rate of interest is paid to the debenture. Like loans, when you take loan from the bank, even you have to give a fixed rate of interest. Same way, a company, when it gets a loan, it is called as debentures. Okay, and for that also they have to pay certain fixed interest. Now debentures, there are many types. Okay, one is secured debentures. Okay, not that required. Then unsecured debentures. Secured debentures means, students, you need to keep some security. For example, when you're buying some loans, no, when you're getting a loan, you have to keep some protection, no, saying that, okay, this is, I will keep my house as the mortgage or my gold as the mortgage. So same way, okay, that is called as secured debentures. In the company also, you have to keep your building or your assets as the mortgage. Unsecured means you don't have to keep anything. Now, what is important here, students, is redeemable debentures. What do you mean by redeemable debentures? These debentures are payable at the expiry of the term. Okay, at the expiry of the term, you can pay them. Now, these can be redeemable at par, premium, or discount. Okay, that redeemable means you can redeem them, you can pay them whenever you want. Either you can pay it in lump sum or you can pay it in installments. Okay, and payable at the expiry of their term. Once it's expired, within that you have to finish paying. Now, fully convertible debentures, this is one more you should know. Fully convertible means, students, these can be converted to equity shares. If the debenture holders says, okay, yes, I had given you the loan, okay, 5 years back, you have paid me only a little bit, okay, but your company is doing very well now, yours is a very good profitable company, so it's okay, okay, I will agree to convert it into equity shares, because equity shares, I will be one of the owner rather than a creditor of the company. I will be the owner and I will get profits also, okay, whenever, if in case the company is doing well, so I will convert it. So fully convertible means you can convert the equity shares at the option of the debenture holder. Now, partially convertible means little bit you can convert. Non-convertible means you can't convert at all. Okay, as simple as that. So we will not get into those details. Next, registered debentures. Okay, registered debentures means what now? Bearer debentures not required. Registered debentures means it can be transferred only by executing a transfer deed. Okay, if in case you have to transfer the debentures to one person to other, you can do it, but only with a transfer deed. That's why it is registered. That's why it is registered. Okay, bearer debentures is just the opposite of it. It can be transferred directly by delivery. Okay, bearer debentures, you can just transfer it merely by delivery. Okay, just for the bearer, whoever is holding it, you can pay them. But registered is requires a transfer deed. Next, students, we were talking in this chapter about financial assistance. Okay, different schemes we spoke about. Okay, and here there is a scheme called S40. It's not required. Scheme for fund for regeneration of industries, that's not required here. Okay, what is required, I will cover it up for you. Okay, this is very important here, students, this one. Okay, a scheme for Aspire. This scheme is important. Aspire. Okay, Aspire means a scheme for promotion, innovation, rural entrepreneurship. Okay, Aspire. Okay, a scheme for promotion of innovation, rural industries, and entrepreneurship is called as Aspire. They might ask you the full form only. Aspire stands for, so you should know the full form. It's very important. And also you should know the objectives of the scheme. That is creation of new jobs and reducing unemployment, promoting entrepreneurship culture. Okay, helping economic development from the district levels. Okay, that is grassroots development. Then coming up with innovative business ideas, and also promoting innovation in the MSME sector. Now, why is this important? As always, I tell you, they might ask you which among the following is not an objective, or which of the following is an objective. So for that, you should know the objectives of these. Apart from this, students, nothing else is important from there. This is important next, ESDP, that is Entrepreneurship Skill Development Program. Entrepreneurship Skill Development Program. Firstly, for whom is it? It is to nurture the talent of youth. Why? To help them set up micro and small industries. Okay, for whom it is conducted? It is conducted for ITIs, polytechnic, technical people. Why? To help them for self-employment. Why self-employment? Because it is entrepreneurship. Okay, entrepreneurship means self-employment, to nurture the talent of youth. Okay, for MSCs, especially for these technical workers, and self-employment is the main goal. Okay, next, what is this one, students? This is for the weaker sections of the society, and 500 rupees every month is given as a promotional package. Okay, 500 rupees every month is given to them as a stipend. Next, very important is here. Which are the financial schemes for startups? Financial schemes for startups. There are 3. Okay, finance schemes. Okay, in this section you have to learn only 3, so let's learn those. One is venture capital scheme, then SIP scheme, then Stand Up India scheme. Okay, Stand Up India is very important. Now let us see one by one. Venture capital assistance scheme. What happens in this? This scheme is run by whom? First, farmers, producers, partnership firms, okay, who are into agriculture. Okay, then self-help groups, companies, agricultural entrepreneurs, and agri-export zones, okay, who are doing this agri-export, and also agricultural graduates who have done BSc in agriculture, and if they're starting their own agricultural products or projects or businesses, they can apply. Next, support for international patent protection in E&IT, SIP, EIT. This only what is important is for whom it is. This is for technological startups students. That is for technical companies who are starting up. And this is run by Ministry of Electronics and Information Technology. This is run by Ministry of Electronics and Information Technology. Apart from this, nothing is important here. Next, this is very important. Stand Up India scheme. Stand Up India. Okay, this scheme is run by whom? This scheme is run by or managed by SIDBI, Small Industries Development Bank of India. Stand Up India. This is for whom? This is for SC/ST, sir, as well as women entrepreneurs. Okay, female entrepreneurs. It's for them. Next, what is given, sir? Here loans are given, students. Loans are given to whom? Either to one scheduled caste or scheduled tribe, SC or ST, or one woman per branch. For what? For having a greenfield enterprise, for a new project. In which sector, sir, it should be? It can be any. It can be any. Manufacturing, services, or trading. Okay, who can apply? SC/STs or women. They should be above 18, either scheduled caste, scheduled tribe, or a woman. Available only for new projects, greenfield projects. Okay, that's what they have told here. Greenfield means what? First time venture. Okay, who are doing the business for the first time. It's only for them. So this is Stand Up India, okay, for SC/ST and for women, and managed by SIDBI, okay, Small Industries Development Bank of India. Okay, I think that's it from this chapter. Yes, students, that's it from this particular chapter. Any doubts, anybody? Got any doubts? Okay, no, sir. Clear. Okay, students. Equity. In stock markets, what shares we get? We get equity shares. Okay, Hitesh. Whenever you buy, it's called as equity. Okay, let's move on to the last chapter, students. We have good 1.5 hours time, but I think within 1 hour we will finish and then you will be free. Yes, yes, Ruchita, yes. Equity shareholders have the voting rights, not preference shares. Okay, good. Shall we move on, students? Any more doubts? Anybody? Okay, let's go on to the next chapter. I hope you can still see the screen. We are in lesson 5, Indian economy, students. One of this short chapter, just 20-21 pages chapter, and we will finish it pretty quickly, I think within 1 hour, because this is one of the easiest chapter. All we have to study about here is about 5-year plans, okay, and the 3 different sectors, that is agriculture, industries, and services. Okay, and what are the developments and government initiatives done in these 3 sectors? Okay, one of the easiest one. Why easiest? These are the things which we have studied in the past in our high school. Only addition to this is, sir, some new schemes and all which have come up in the recent years, and you will know them. Why? Because these are the things which happen in and around us in a daily basis. We can read about it in the news. So this is the economy, which is the hot topic in discussion in this entire year also. Okay, so let us start and let us mark what is important here. So Indian economy. So students, Indian economy depends on agriculture, industries, and other tertiary sectors, but mainly remember agriculture is the primary source. Okay, agriculture is the primary source of livelihood of India's population. We still believe in agriculture being the primary source of our livelihood. Next, underline, the Indian food and grocery market is the world's 6th largest. Okay, we are the 6th largest in terms of sales. Okay, in terms of sales in the food and grocery market, and we still have a big opportunity to grow here. Next, students, underline the full form of DPIIT. DPIIT is Department for Promotion of Industry and Internal Trade. The full form is important. DPIIT stands for, okay, Department for Promotion of Industry and Internal Trade. Okay, Srijan has asked me a question. Company can issue both equity and preference shares. Yes, they can issue both equity and preference shares, but usually they issue equity shares, okay, not preference shares, until and unless they mention it. It's very rare, okay, that preference shares are issued. Company usually issues both, only equity shares, but they can issue, yeah. Okay, let's move further. Next question, students, from here it might be this one. The first mega food park, was inaugurated in Rajasthan, okay, in March 2018. The first mega food park, okay, mega food park was inaugurated in Rajasthan in March 2018. Next, students, in agriculture, what are the main government initiatives done? Firstly, government has launched Pradhan Mantri Kisan Samman Nidhi Yojana. Okay, Pradhan Mantri Kisan Samman Nidhi Yojana. Okay, and up to February 2019, almost 2021 crores have been done. All that is not required. Okay, and more than 10 million beneficiaries, but you should know the scheme, PM Kisan. Okay, Pradhan Mantri Kisan Samman Nidhi Yojana. That's a government initiative in this agricultural sector. Okay, then what is important is this one. The Agriculture Export Policy 2018 was approved by Government of India in December 2018. Okay, the agricultural export policy was approved by Government of India in December 2018. So you can see the connect now, students. Okay, 2018 we can export agriculture. Okay, agriculture and agricultural produces we can export. 2018 this was launched, this policy. And recently in 2020 what was issued? The farms bills policy was issued, the farm bill. Okay, in farm bill they have told that it will help the farmers a lot where they can sell their products. But in turn, if you think properly, students, 2 years back, agricultural export policy, and you know, a local farmer or a small farmer cannot export always. It has to be all the big guns, big giants. So that is why the farm bills are passed now. In farm bills, what is it told clearly? That farmers, instead of selling it to others and not getting enough price, they can sell it to big companies. Okay, big companies like Reliance, Birla, okay, all these companies. So what will these companies do now? These companies will buy from the farmers, okay, and they will start exporting it, where they will start minting money in dollars. Okay, so that is the connect, students. Agricultural export policy, remember 2018. I don't think they should ask you about the farm bills. If they ask you about farm bills, it is 2020. Otherwise, remember, agricultural export policy was approved by 2018. And since our economy depends on agriculture, we have to do more and more with agricultural reforms itself. Next, in September 2018, one more policy called PM Asha. PM Asha, what is it? Pradhan Mantri Annadata Aay Sanrakshan Abhiyan. PM Asha, Annadata Aay Samrakshan Abhiyan. Okay, this, and what is this, sir? This policy decides the compensation scheme. Okay, if in case farmers' crops are lost, how much money should be paid to him? Compensation scheme. Not only that, and the partner, the farmers can partner with private companies also, so that they get fair prices for their products in the country. Okay, that is why Pradhan Mantri Annadata Aay Samrakshan Abhiyan, PM Asha, was introduced. Apart from that, students, you should know, for benefiting digital technology for farmers and cooperatives, we have Primary Agricultural Credit Society. This has been computerized now. Okay, why? So that farmers get benefit of digital technology and they can sell online via digital. Okay, digital medium. Next, very important, students, for innovation and entrepreneurship, for getting new techniques and new ideas, and for getting youngsters to have their own business in agriculture, government has introduced a program called Agri Udan. Agri Udan. Why is this? This is to help startups and to help them to connect investors. Okay, this is to guide the startups and to help them to come up, meet the new potential investors. Agri Udan. So see, students, we saw so many programs. We saw PM Kisan, okay, PM Asha, and Agri Udan. Okay, 3 different programs we saw. So remember which program is for what. Once again, I repeat. Okay, PM Kisan Samman Nidhi Yojana. This was for opening up bank accounts for farmers. Okay, then there was PM Asha Annadata Ay Samrakshan Yojana. This was for compensation scheme and tying up, okay, so that they get good prices with private agencies. Then for digital technology, it was computerization of agricultural credit society. That's not that great, okay, but what is more important is Agri Udan. Okay, Agri Udan. This is for what? This is for entrepreneurs and startups. Okay, startups. Then there is one more, PMKSY, Krishi Sinchai Yojana, Pradhan Mantri Krishi Sinchai Yojana. You should know with the name only. Sinchai means for irrigation. Okay, for development of irrigation and to have a solution from drought, that is no dry farming. Okay, so that the farms are not dry. So development of irrigation. Pradhan Mantri Krishi Sinchai Yojana. Okay, development of irrigation and a solution from drought. Next, Sampada scheme. Why is Sampada scheme, sir? Sampada scheme is for investing for mega food parks, for developing food parks in different parts of the country. How we had one in Rajasthan, the same way for investing in mega food parks, having a Sampada scheme. What is Sampada, sir? Scheme for agro marine processing and development of agro processing clusters. Okay, where you can process your agro based products, agricultural products, and come up with your manufacturing and finished products, mega food parks investments. That is why this is called as the Sampada scheme. So students, once again, Sampada scheme, Sinchai Yojana, Agri Udan, PM Kisan, and PM Asha. There are 5 schemes in agriculture which you should remember. There are 5 schemes in agriculture which you should remember. Next, students, secondary manufacturing. Secondary type of industries. Primary is agriculture, secondary is manufacturing, tertiary is services like insurance and all. Okay, now we are talking about secondary. In secondary, students, the first manufacturing, whenever we talk about manufacturing, we talk about Make in India program. Okay, Make in India program was launched. Why? This was to make a manufacturing hub. Okay, manufacturing hub, and it is, India is expected to become the 5th largest manufacturing, they have told, but we do not know how it will be ending with the year of 2020 because of the pandemic. Okay, but remember now, Make in India program is for what? For agriculture or manufacturing or services. This is for making India, okay, making India a manufacturing hub and giving global recognition to the Indian economy. Now, next, what is important in manufacturing? There are a lot of things, but only a few things are important, so don't you worry. Okay, this is important. Philatex India. Okay, as of October 2018, Philatex India, what is it? It is a polymer manufacturer, sir. Okay, they want to set up a fabric manufacturing and processing unit. Okay, okay. Philatex India, a polymer manufacturing, wants to set up a fabric manufacturing and processing unit. Just some companies you should remember. They might ask you, okay, Philatex, a polymer manufacturing, and wants to set up a agricultural, this thing. So many options might be there. It's fabric manufacturing and processing. Then Wipro 3D. Okay, Wipro 3D and IISC, Society of Development and Innovation. IISC, Society of Innovation and Development. They want to produce India's first industrial scale 3D printing machine. 3D printing machines are there, but this is, okay, industrial scale, big 3D printing machines. Okay, India's first industrial 3D printing machine, okay, is a collaboration of whom? This is a collaboration of IISC, Society of Innovation and Development, and Wipro 3D. Okay, so the question might be like this: India's first industrial scale 3D printing machine is a collaboration of Philatex India and Ashok Leyland, one plus research and some other company they might give you, Wipro and IISC. So remember, it's Wipro and IISC. Next important part in manufacturing is this one. in Union Budget 2019, Government of India, okay, in which budget? In the year 2018-19, Government of India has reduced the income tax to 25% for whom? For companies. That means which tax? Corporate tax. Okay, income tax for companies means corporate tax. Okay, they have reduced to 25%. Okay, for whom? For companies which have up to 250 crores of turnover. Next, FDI in defense under automatic route is 51% now, students. Okay, FDI in defense under automatic route is 51% now. They are saying in order to give a boost to Make in India initiative, but we do not know how far it is a good decision to give FDI investments to the outsiders. 51%. Okay, but remember this, because usually people get the wrong answer here. They write it as 49. It is not 49, it's 51. Okay, why? Why people get it wrong is because students think, oh, defense sector, no, defense means it is very secure for India, so it might not be 51, but it is 51%. Okay, but it is 51%. Next, students, this FDS you should remember, it might be there somewhere, we will see. Next, strategic partnership model government is working on. In which one, sir? In Ministry of Defense and private companies have come up with a strategic partnership. For what? For manufacturing foreign submarines, fighter jets, helicopters, armored vehicles, all these things. Okay, Ministry of Defense is making a tie-up with private companies, with foreign players, to come up with submarines, fighter jets, helicopters, and all these things. And this model is called as, their partnership is called as a strategic partnership model. Okay, strategic partnership model. Next, tertiary, third sector, we are in services sector, and India was doing well in this services sector, especially in IT services, information technology, students. But let us see what we have to study here. Underline this one. Okay, sorry, here we have missed 1 point or 2 points here. India has ranked as the 8th largest producer, sorry, exporter, not producer, largest exporter of commercial services. That's what I told you, the IT services we give. Okay, we are the 8th largest exporter of commercial services, 8th largest. And India is the 2nd largest in telecommunication market. And we are 2nd highest in number of internet users in the world. 2nd largest in telecommunication and 2nd highest internet users in the world. Okay, I did not underline that, so make note of that. Next, government initiatives. Firstly, for eligibility of credit support for exports students, we have service exports from India scheme. Okay, for helping export services in India and giving a good credit facility, we have services exports of India scheme, services exports of India. Next, very important, students. 2 types of questions can be asked here. Okay, which are the components of national digital communications policy? So national digital communication policy, the components or the 3 missions are Connect India, Propel India, Secure India. Connect India, Propel India, Secure India, CPS. These are the 3 missions. Okay, so they might give you which among the following is not a mission, or they might give you which of the following is a mission of National Digital Communications Policy: Connect India, Propel India, Secure India. All of these, if they give you, it is all of these. Remember, connect, propel, and secure. Or they might ask you individual questions. Okay, creating robust digital communications is. So students, creating robust digital communication infrastructure, creating infrastructure is Connect India. Creating, CC, creating is connecting. Next, in case enabling, that is next gen technologies, coming up with next gen technologies or new investments, this is called as Propel India. And taking care of safety and security is Secure India. So Connect India is creating infrastructure, okay, digital infrastructure. Propel India is coming up with new technologies and investments via innovation and all that. And Secure India means, taking care, safety and security of digital communication. Next, all these policies, just remember the year, students. National Tourism Policy 2015, Health Policy 2017, Educational Policy 2016. Just remember the years. Next, FDI, students, okay, 100% is allowed in which and all sectors? Let's see. FDI 100% is allowed in air transports, then in tourism and hospitality, mostly in all service industry, students, it's 100%. Okay, see here, air transport 100%, tourism 100%, education 100%, healthcare 100%, then telecom 100%. Okay, railways 100%. That is for approved projects. Okay, approved projects only. And insurance is 49%. Because insurance, Indian insurance only, there are a lot. Okay, if in case they come up with tie-ups, then it's 100%, but otherwise it's 49%. Now what you should remember here is this one. Which one? This healthcare. Students, healthcare is 100%, but 100% FDI for which one? 100% FDI for new ones. Okay, for greenfield projects, for new ones. Okay, and for old existing projects, okay, but if they want to come in now, okay, brownfield projects, okay, for them also it's 100%, but under government route. You have to tie up with the government and come via their permission. Same way with telecom also, it is 100%, yes, okay, but out of 100, 49 is through automatic, directly you can invest. But for remaining 51%, no, if you're doing 100%, 49% you can come directly, no need of asking. You just come, tie up with someone and start. But if you want 100% completely, you have to come up with FIPB approval. Okay, if you ask me what is FIPB approval, it's Foreign Investment and Promotion Board. Okay, Foreign Investments and Promotion Board. Okay, you need to take an approval from them. Okay, and then come up with 100% FDI. Okay, if not, 49% is allowed. See, 100% is also allowed. Okay, FDI, but 49 directly, 49 you can come, but you need an approval from the government. It's not like you cannot invest 100%. You can, but 49 directly. Remaining 51 is via approval route. Now, students, till here, any doubts? Anybody till here? Because now I'm starting with the 5-year plans for agriculture. 5-year plans for agriculture. Any doubts till here? Yeah, insurance is 49%, Hitesh. Okay, in case you have doubts, put here, because I keep checking the chats every now and then. Let me start with the 5-year plans and agricultural policies, students. Okay, I have noted it down in short ways for you to remember. Okay, no need of remembering everything. First 5-year plan, priority agriculture. just remember only so much. First 5-year plan, highest priority, agriculture. Second 5-year plan, highest priority, industries. Highest priority, I'm saying. Others were there, but highest priority, industries. Third 5-year plan, students, very important. Why? Because green revolution was started in this third 5-year plan. Green revolution. One, that is why it is important. Third 5-year plan. Remember 1961 to 66. Then see, green revolution was started, yes, but again this third 5-year plan is very, very important, students. Okay, this is very important, third 5-year plan. Why? Because students, this plan failed. This third 5-year plan failed to meet the target. Why? Because of 3 reasons, students. One was Chinese aggression. One more was Indo-Pak war. And one more was India didn't have proper rains also, so prolonged drought, and we didn't have good irrigation facilities also. The drought was so bad, that means the food was not there. Okay, that our prime minister that time, who was the prime minister during the third 5-year plan? Lal Bahadur Shastri, who is known prominently for Jai Jawan Jai Kisan. Okay, in 1966, during 1965-66, he said, you know, you should fast once a week. That was very bad. That was the crisis of food in India. Okay, we couldn't manufacture food. People did not have food to eat. So remember, third 5-year plan, green revolution was started, but we couldn't succeed. Reason is because we failed because of 3 reasons. Reason number 1, Chinese aggression. Reason number 2, Indo-Pak war. Reason number 3, we had droughts. Okay, and prime minister during that time was Lal Bahadur Shastri. And then he said, since we didn't achieve this third 5-year plan, let us have 3 annual plans. From 66 to 69, we had 3 annual plans. Okay, and we had a record growth that time. Okay, 3 annual plans. Next, fourth 5-year plan. In the fourth 5-year plan, concentration was for students, this one, high yielding seeds, fertilizers, agricultural techniques, and irrigation. Okay. Why? Because sir, previously green revolution was done, no? So something in green revolution only they have to do better. That is why what did they do better? They did, sir, focusing on fertilizers, new techniques for agriculture, irrigation facilities, and good high quality seeds. Okay, high yielding seeds. Next, fifth 5-year plan. Fifth 5-year plan, students, just remember on this. Dry farming was started. Okay, rest is not important. Fifth 5-year plan, dry farming, and one more is poverty eradication. Eradicating poverty. Sixth 5-year plan is not required. Seventh 5-year plan, highest growth in food grains, pulses, and cereals. Highest growth. See the problem. Seventh 5-year plan, highest growth in food grains. Okay. Since that was there, 8th 5-year plan, we became little lazy and there was stagnation of food grain. There was no rapid growth. Stagnated growth. 9th 5-year plan, only for one thing you should remember. National agricultural policy was framed. National agricultural policy was framed. And also many measures were taken, students, like watershed management, development of horticulture and all these things. But mainly national agricultural policy was framed. 10th 5-year plan not required. Okay, not required. I have underlined that, but that is a wrong underlining, students, because it is a part of 9th 5-year plan, not 10th. Okay, this is wrong. This has to be actually next paragraph. See, actually, this is given printed wrongly here. Actually, this is only till here, this paragraph. Okay, After that, this is next paragraph, this one. How do I mark that? I will mark it here. This is new para. Okay, new para. Why? Because they're telling about agricultural policy, students, here, and they are telling you which were the main aims of the policy. What was the main aim of this new agricultural policy, which was launched in 2000? Okay, one was achieving more than 4% growth in agricultural sector. Okay, next was taking care of our resources, soil and water and biodiversity. Next is not only growth in agriculture, okay, but helping farmers also. Okay, growth with equity, good monetary growth also should be there for the farmers. Okay, not only growing agriculture, but farmers also should benefit. Okay, next is not only domestic market, but maximizing benefits for exporting agricultural products also, and development of technology, economy and environment. These were the main objectives of the policy. Next, 11th 5-year plan. Now, 11th 5-year plan, students, you should know in 11th 5-year plan, this is for inclusive growth. Inclusive growth. Inclusive growth means what, sir? Inclusive growth means farmers will increase production. Okay, public investments should be grown. Okay, people should invest in diversified stocks like livestock also. Okay, not animal husbandry, livestock, agricultural crop, horticultural crops, and taking care of food security. More than this, students, what is important in 11th 5-year plan is this one. 11th 5-year plan, two things were launched. One is NFSM and one more is RKVY. One is National Food Security Commission in 2007. And one more is Rashtriya Krishi Vikas Yojana in 2008. So two things, students, for 11th 5-year plan. It was an inclusive growth which was aimed at, and two missions were started, one in 2007, one in 2008. In 2007, it is National Food Security Mission. Okay. And 2008, it is RKVY, that is Rashtriya Krishi Vikas Yojana. Now, why was food security mission launched, sir? To improve the country's overall production. And what was the need for Rashtriya Krishi Vikas Yojana? Sir, Rashtriya Krishi Vikas Yojana is for encouraging states to increase public investment in agricultural and allied services, to help people invest in agriculture. Rashtriya Krishi Vikas Yojana. See, many schemes were there here in RKVY. Just remember the scheme, students. They might sometimes give you which is not a scheme, which is a scheme. Just go through roughly. Okay, especially important ones are these: Green Revolution in the eastern side of India. Okay, encouraging use of palm oil. Then vegetable cluster zones, saffron mission. Okay, that's it. 12th 5-year plan not required. Next, industrial policy. So we saw completely on agriculture, students. Any doubts there? Any doubts on agriculture? Five-year plans in agriculture. Any doubts? Okay, pretty clear. Okay, let's move on. Industrial policy. So students, Government of India declared its first industrial policy on 6th April 1948. So remember, when and all we had IPRs. First IPR was 1948, Industrial Policy Resolution 1948. Okay, first industrial policy 1948. And that time, students, okay, we had 4 categories of industries. four categories. One was strategic, second was basic, next is important, and then it's other. Now, what are these? Strategic, basic, important, other? Let us see one by one. Students, strategic means public sector industries. Strategic means public sector, which will belong to the government. Why? Because it is very secretive, okay, and others should not involve into it, especially private people. They might tell other countries or other foreign countries should not involve into it, okay. So government had monopoly, central government had monopoly. Strategy of our country should not be compromised, okay. So which and all were those? Only three industries were there in that, okay. So remember that in strategic we had three industries, okay. Which three, sir? It is arms and ammunitions, atomic energy, and rail transport. Unfortunately, students, we have compromised now with arms and ammunitions and rail transport, okay. It is no more public, we are even allowing private, but for the exam perspective, remember strategic means public, okay. Three industries are there: arms and ammunitions, atomic, and rail transport. Next, student, basic industries, key industries. This means public and private. Public and private. In this, students, there are six industries. There are six industries in this. Which one? Coal, iron and steel, aircraft manufacturing, shipbuilding, manufacturing of telephone, telegraph, that is not there only now, telegraph, and wireless apparatus, and mineral oil. These were called as key industries or basic industries. This was with the private and public partnership. So how many industries were there in this basic? Sir, basic industries were six. Next, students, is important industries. Important industries were taken care by private people, okay. These were controlled by private sector. There were 18 industries in this, okay, which were called as important industries. Which one? All these heavy chemicals, sugar, cotton, wool, paper, fertilizer, rubber, sea transport, motor, tractor, electricity, air transport, all these things were there, okay. So how many industries were there here? 18 industries. So three industries strategic, which were controlled by public, okay. Arms and ammunitions, atomic, and rail transport. Six key industries, both by public and private, okay. That is manufacturing of telephone, telegraph, wireless, mineral oil, iron and steel, as well as coal, okay. And aircraft manufacturing, ship manufacturing, okay. And then important industries, there were 18 industries, students, okay. Now remaining all of them came under other industries. All of the others, whichever are not mentioned above, no, all those are under other industries. This was according to IPR of 1948, okay, Industrial Policy Resolution or Industrial Policy of 1948. Then came the next one. Industrial Development and Regulation Act of 1951. Students, this date, I think it's wrong. This is not 1991. This is 1951. Okay, this is 1951. Not that important. Okay, very important about this is nothing but it had two provisions. This is important. It had two provisions. Okay, and which were the two provisions? One was restrictive provisions. Okay, restricting. What to restrict? No having unfair trade practices by industries. Okay, no having unfair practices, no doing fraud and all that. And one more was reformative, bringing in changes. Okay, bringing in changes. So this was the thing of 1951, nothing more. Okay, just two things. Next is IPR of 1956. Just remember the date, nothing else is required there. Okay, only thing what is pretty important is this one: preventing private monopolies. Preventing private monopolies. Next, IPR or Industrial Policy of 1991. Very important. Okay, this was the new industrial policy of 1991, and India had an economic instability at that time, and that was the time this was brought in. Okay, and the objective was to raise the efficiency and accelerate economic growth. To raise the efficiency and accelerate economic growth. And important part was this one, liberalization of foreign investments. Okay, foreign investments were liberalized, the FDIs which were talked about. Okay, that was all post 1991 students. Okay, everything was post 1991, not before that. And then also promotion of small scale industries was possible. Small scale industries were also promoted in 1991 onwards, after 1991 onwards. Then one more big reform of 1991 was abolition of industrial licensing. We saw it in the previous chapter also, this license Raj system, okay, asking license for each and everything. This system was abolished. Next part, students, is balance of payments. If you have any doubts still here, please do ask me. If you have any doubts, I will give you a minute. Students, if you have any doubts, please do ask. Okay, I will give you 1 minute here. In case you need to take a break, take a break. Also, just a 1 minute break if you want to just relax and get some water or go to the washroom, be back quickly. We just have another 10 minutes of session and then we wind up. Okay, I am here. If you have any doubts, to ask. We're in the last part, trade balance and balance of payments. Take a quick 1 minute break. If you have doubts, ask me right now, or else take a break and be back, and we will start in another 45 seconds. Okay, cool. Okay, that's, I think, thanks, Bhumika. I think you were the host when I quit. Yeah, thanks for making me the host back. Okay, the recordings are on. Perfect. Looks like I just lost connection with one of my internet. Okay, no problem. Another internet is fine. Okay, we were in balance of payments, students. Okay, this is what I was telling you, balance of payment. And the balance of payments is the method countries use to monitor all international monetary transactions at a specific period. All international monetary transactions during a specific period. Okay. Now, what specific period? This is every quarter and every year. This is known as credit. And if you are paying the money, this transaction is called as debit, obviously. Okay. Whatever you're receiving is called as credit. Okay. And whatever you're paying, if you are paid or given money to someone else, okay, this is called as debit. Now, theoretically, students, BOP should be zero. Why? Whoever you have to give money and whatever you have to receive should be zero theoretically. But in real life, it is never zero. Okay? In real life, it is never zero. Okay? So students remember, a country's trade balance equals to the value of exports minus imports. So exports minus imports is nothing but trade balance. This will tell you if the country is exporting more or importing more. Okay, and whatever difference you get is called as trade balance. Now, with reference to India, okay, with reference to our country, students, this is the components of balance of payment. You should know the different headings. Okay, there are three different headings in account. One is the capital and financial account, and one more is the errors and omission. Okay, so errors and omission. So how to calculate under current account, what and all we have? We have goods, okay, primary income and secondary income. And in capital and financial account, what are the things? Sir, there is only reserves, either if the reserves have increased or they have decreased. And how to calculate errors and omissions, sir? Errors and omissions, students, is nothing but A plus B, that is current account plus capital account. Okay, and that is called A plus B here. Okay, and remember, P means preliminary, PR means if in case you have made any change. P is preliminary and PR is partially revised. Because you know why? They might simply give you a question, they'll not give you, but in case, rarest of the rarest case, they might give you, in India's balance of payments, what does P and PR stands for? So P stands for preliminary, PR stands for partially reserved. Okay, or they might give you a question, primary income and secondary income, okay, in India's balance of payment comes under which account? Current account, capital account, errors and omissions. So you should know primary income and secondary income come under current account. Under capital account, only one thing comes, that is change in reserves. That is change in reserves. Now, students, favorable and unfavorable balance of trade. What is this? But before that, let us underline the definition of balance of trade. Balance of trade means balance of value of exports and imports. Students, understand what's the difference between, see, these are two different things. Balance of trade is different and balance of payment is different. Okay, balance of payment is difference between the money. Okay, difference between the money. They have not given you anywhere difference between what money and what money. Okay, here trade balance or balance of trade means net exports, difference between the monetary value of exports and imports, monetary value of exports and imports. This is called balance of. Now you should know two types are there. One is favorable balance of trade. When is favorable balance of trade? If your exports are more, it is favorable. That means you have to get money from someone. Unfavorable balance of trade. That means we are importing too much. Then it is if in case you are exporting much good, no, we are getting more money. Okay. If then imports, okay, that is called favorable. If our imports are more than exports, that is called as unfavorable balance of trade. And students, here we should know a few things. That is this one. Highest balance of trade was here. We were doing very good here. All-time high in 1977. We were exporting more, importing less. Superb. 258.90 USD, million US dollars, in fact. And worst was here 2012, minus 20,210 million US dollars. These are the highest and the worst performance you should remember. Okay, the highest and worst performance you should remember. Next, foreign investments in India, students. Foreign investments in India. Investment students can, and if I make an investment, even that is considered as foreign. See here they have given. In India with the source of funding from outside is called foreign investment. By this definition, invest abroad people as well as NRI. As well as NRIs. These are called as foreign investment. So there might be an option for you. Okay. Is come under this category according to the definition. Okay. So foreign corporates, foreign companies, countries, as well as NRIs. If they invest here, it is called as foreign investment. Now, how can they invest? They can invest in the form of shares, properties, however they want. That depends. FDI, FPI, and FII. Direct investment, foreign portfolio investment. What is FDI now? Okay, foreign direct investment. Okay. Now, one American company wants to invest in India. An investment made by a country in the form of controlling ownership in the interest of other country. They can come by joint ventures, mergers, acquisitions, new facilities, however they want, they can come. So FDI means students. For example, this is company ownership. Company owner. Okay. Foreign direct investment, or it can also be foreign direct investment. Why they come? They want to control ownership in business interests. They want to control the ownership. Next, students, let me tell you FII first, then I'll tell you FPI. Next is foreign institutional investments, FII. Students, they do not want to control anything. They do not have intention to control anything. They don't want to control anything. They just want to see, oh, stock markets have fallen in India, is it? Let me buy the stocks. Oh, the market is increased, is it? Let me sell and get out. Oh, Singapore market looks very less. Maybe I think in 2 years, Singapore market will come up. I will invest in Singapore stocks. I will buy the stocks. Once this market comes up, I will sell. That is just investing. Okay. So foreign institutional investments are investment by foreign entities in securities, real property, mutual fund companies, hedge companies, all these things. They do not take controlling interest. Whereas here, these FDIs want controlling ownership in the business by joint ventures and all that. These do not want control. They simply want, just investing like mutual funds, hedging, stock market things. These are FIIs. Now let us see what is FDI is an investment by foreign entities and non-resident Indians in which one? Including shares, government bonds, convertible securities, infrastructure securities. Here, the intention is to ensure a controlling interest in India, which is lower than FDI. I want to control, to exit and enter also easily. Okay. I want little less investment. So the best of FDI and FII is FPI. See, understand students, combination in the sense, it is not like you're getting control like FDI and all that. See, I forgot to write here. See, by foreigners in stock market. Okay. FPI means what, students? This is something like investing, but in government bonds. See, when I'm investing in government bonds or companies bonds, okay, what am I doing? Indirectly, I am taking control, but I don't have any control. Okay, but still I'm thinking that I have control because it's the government of India bonds. Okay. No much investment like headache like FDI is required. Oh, I'm controlling this. I have to make decisions. I don't have to make any decisions. Okay. And it's easy. 8 years bond is completed. I will take the profit or the interest from that and I'll. Now see here the difference of FDI and FII is given. Okay. This is nothing but the difference itself. So if I have to tell you what is very important in this is FDI helps in economic growth. Okay, in FII there is no economic growth. They just invest, come and here I told you this is for company situated in abroad. This is in stock market. And they have specific company target. They do not have any target. Wherever they find interesting stocks, they'll buy and go and finish. Here, there is a control over a company. Suzuki can control Maruti. Okay, Hero and Honda were there before. Or McDonald's can come in and capture other markets also if they want. FII, nothing like that. No control and all that. Just take it, take the profits and go. That's FPI. If you have still not understood, look at this. In this, investors are very active. Here, no. Once I buy the bonds, I will keep it. Okay, once I see here very clearly they have given investment in financial asset is known as FPI, like government bonds, securities, all these. Here you're investing in physical assets. That means you need a building, you need a land, you need furniture, you need interior decorations, you need to show off with your brand. Here nothing. Somebody is running the brand something. I am just an investor. I've taken bonds. It is not like stock market. Remember, it's not like FIIs where I'm, oh, stock, this stock is interesting, I'll buy and go. No, this is investing in a particular company itself. Okay, that is called the difference between FPI and FII. Okay, anybody doubts between FDI, FPI, FII, or any other doubts from this particular chapter, students? You can ask me right now. Any doubts you guys have? You can ask me right now. No doubts. Clear. Okay, students, any other doubts you got to ask me? You can ask me now, or else we are done with the revision, students. So what I will do is I will send across all the, underlined material to you via Trisha classes. Trisha classes might send the material to you, students. Okay, I will send them by today or tomorrow, and by another 1 or 2 days, you should receive it. Okay, now question papers, students, I have told you last time, okay, where you need to go for question papers. Okay, you need to go to the ICSI website and find it there. Okay, in case you do not know where it is, let me share the link with you now. Let me share the link with you. Mm. Okay, CS executive, CSEET. Okay, here is the link. Control C. Where is your Zoom? Okay. Oops. Sorry, I sent it to only one person. Okay. Here is the link, students. If you want, let me stop sharing and let me start sharing the screen. You will not be able to see me though, but I will. I'll try. Wait a minute. Okay. Can you all see the link, students? I mean, can you all see the screen now? Okay, you can see, right? So when you click on that, students, when you click on the link that I sent you, okay, you can, this screen will open, students. You can see the screen, no? ICSI mock test 1, 2, 3, 4, 5. Now see your students, if I open this, see here it opens. You have all the papers here and answers are also given. You remember these were the papers we discussed. If you want my paper, you can see here. Okay, economics and business environment. Everything is here. Okay, third paper. But all the papers are here. Okay, third paper. But all the papers are here. Okay, economics and business environment. Everything is here. Okay, third paper. But all the papers are here. Now, students, okay, you can answer, see here, CSEET mock test set 1. Try answering these also. See, first 5 papers, no, very easy. When you click, it will open. But these will not open like that. These, when you click, no, see here. you will get your login ID and password. So students, use your login ID and password and then enter. Okay. Use your login ID and password, then confirm your attendance, sign in, and then answer these mock tests. Clear? In case, hope everybody should know your login ID and password. In case you do not know your login ID and password, ask your, wherever you registered. Okay. Ask them for it, or ask Trisha classes. They would know it. Okay, students, good luck with your CSEET exams. I hope, the exams will be easy, and God bless you all. You will do really well. Do not panic. I will send you all the notes every day or every once in 2 days. Students, just try reading, everything. You will finish within half an hour or 1 hour when you go through all the points. No, tomorrow there won't be class. Okay, I will not take class tomorrow because we're finished today. Okay. So I do not know about the ID, Srijan. You need to ask it with Trisha classes. I'm not sure. Okay, what ID and all, what is the login ID password? I'm not very clear about that. You should ask Trisha classes regarding it. Okay, Diksha, tomorrow there are no classes as such. Okay, so students, good luck. Study hard, be smart enough, and answer the questions. I'm sure you all will clear and come out with flying colors. God bless you all. Have a nice day, students. Bye-bye and take care.